But the silver bullet is a time specific setup that forms between 10 o'clock and 11 o'clock. And I know you're already going to ask, why does it only work in 10 and 11 o'clock? Well, that's the morning session silver bullet. There's an afternoon session that I'll teach you later on. We got all year, okay, all kinds of tricks to show you. But between 10 o'clock and 11 o'clock, what you're looking at is the last portion of the move that's going to unfold just for that AM session. And you're right in the heart of the move. And fair value gaps are generally forming after a move begins. There's an inception of a move that you missed. That's like selling short above old highs. You didn't get in it. You weren't able to do that, but you don't need that. Like I was teaching with the 2022 model, you don't need that to be able to do consistent setups. Between 10 o'clock and 11 o'clock, you are in the heart of the AM session move, which is essentially between 8:30 in the morning to 11 o'clock. It can go as far as noon, the beginning of New York lunch hour, but it's, again, a graduated thing in terms of time. There are macros that exist in price where between 9:50 and 10:10, in that 20-minute period, generally you're going to see a price run that begins within that 20-minute span. There's people out there trying to teach my stuff already in their little mentorships or their thing in Discords and such, Instagram, and they're already trying to say the move happens between 9:50 and 10:10. You're already doing it wrong, so stop trying to teach my stuff. The move begins in those 20 minutes. It's not the entirety of, I mean, obviously it can, in a fast move or fast market, it can do that. But what you're looking for is a run that begins between 9:50 and 10:10. That's the macro. It starts doing its run between those two time windows. There's another macro that exists at 10:50 and 11:10. There's two macros that start in those two hours. The silver bullet is specific to the 10 o'clock to 11 o'clock hour. And what we're looking for is an obvious pool of liquidity that has not been tapped into or engaged, which I've mentioned obviously with the lines here, you see it. You're not demanding that you capture the daily range. You're not demanding that it goes to your technical target. You're only expecting it to give you your 5 handles. Big paradigm shift there, because a lot of you also are taking this idea and trying to make more of it than it really is. Will there be times when that move is a significant higher low of the day and it just keeps on running? Yes. But in the beginning, you don't know when these are going to be there. You don't know what that criteria is to cause that. That's a whole lot of other things that you have to learn progressively over time. So I'm reminding you as gently as I can to stick to the rules I'm telling you to stick to. And that way you won't be taken into these false expectations that it's going to do much more than it's designed to do. Case in point, fair value gap, I told you that we extend that forward. When it was bumping up on the bottom of that, here I was looking at the 5-minute chart. I thought it was a 1-minute chart because I was busy talking to you. I said I would go short there with the expectation to run lower. If you see that price there at 78 3/4, that's better than 5 handles. Did it take the sell side? No, but that's the structure that we used for draw and liquidity. Remember, I teach partials. I teach that you have to pay yourself. I teach you that it's just a way for you to frame your expectations on where the price should gravitate to. So go back up to a 5-minute chart real quick. So here's the low I was anticipating a draw to. Fair value gap here on the 5-minute chart as it went up into there. So as we hit that, if it were not seeing these relative equal lows here, If we didn't have the relative equal lows, if it was just one singular low, that would be an aggressive entry for me, and it would be where I told you, and it delivered immediately, as I said, attacking this short-term low. It offered more than 5 handles. That would be it. Now, compare and contrast, and I know some of you probably already in this trade, and you were probably holding on for this sell side, and this probably just ripped against you. Don't take the trades. You're learning how to read a tape. You're listening to me and trying to do it as I talk about it. That's not how you learn. So, anyway, the delivery of 5 handles, that's the easy, absolute, 100% guaranteed, time-specific setup that if you are a brand new person or someone's coming to this channel for the first time, a setup that forms so consistently, so routinely, there's so many things that are inside this model, and it's a complete model. It's an entire model in and of itself. Between 10 o'clock and 11 o'clock, you absolutely know that this formation is going to be there. It's going to be there. Now, does that mean that you're going to have a winning trade every single day between 10 and 11 o'clock? Absolutely not. Absolutely not. It just means that you have an opportunity to have something that statistically is there all the time. And I don't want you to take my word at this. I want you to go back and look at every single trading day you can have data on and go through and see it's there. Now, what you need to practice is understanding, as I mapped out this morning, you don't need to be right about your levels. You just need to be right about, does it offer the range? Does it offer something better than 5 handles? Because if it can move better than 5 handles, chances are you probably will get 5 handles out of it. What do I mean by that? When we were looking at this fair value gap here, and it was bumping up and against it here, I said, okay, if we didn't have the relative equal lows here being specifically this low and that low, what was my apprehension? Because this could be a run lower, take the sell side out, and then rip higher and complete that new week opening gap high here. So it's not a singular low, it's relative equal lows. So there's going to be sell side below that. So they went down below it, yes, but I wanted to see this low taken out. That was one I would have been preferring rather. But an aggressive entry would have been right here. Did it offer 5 handles? Sure. Did it get to the sell side? No. Does it mean rather the model's broken? No. You're operating inside these rules with the expectation that it's going to offer you 5 handles. You might not get it. It might be an instance where you're watching price and you expect it to do something like I would, what I was looking for, and it might not deliver it to you because your parameter, your entry, your limit order didn't get tagged in. You can't look at that as a reason to be upset. You can't be thinking, well, I wasted my time. How many 10 o'clock to 11 o'clocks in the future are going to be available to you? As long as you have breath, right? As long as you have your mental faculties and the markets are open, you have lots of those laboratory experiments to work with now. Said it exists every day. Between 10 o'clock and 11 o'clock, identify liquidity, find a fair value gap. The fair value gap has to be opposing, in other words, opposite to the direction that you anticipate the liquidity to be drawn to. For instance, fair value gap after displacement lower, we wait for it to trade up into the fair value gap and then trade towards a pool of liquidity lower in the form of sell side. If you're bullish, you're looking for the market to trade higher, displacement higher, leave a fair value gap below market price, then trade down to the fair value gap, and then gravitate towards a pool of liquidity, which will be buy side that hasn't been engaged yet. And it has to have better than 5 handles in terms of the range from where you think it might get to. Not that it needs to get there. Remember, I'm teaching you how to look at price, removing the necessity of being right. Because right is not, it's not a destination. Being correct is not a destination. Excellence in execution is, and it has a very small population. The only way you get to be a member of that is by doing the things I'm telling you to do and avoid the things I'm telling you to avoid.